The discount menswear industry is in turmoil. Last week, Men's Wearhouse kicked out its chairman and spokesman, George Zimmer. Now, Joseph A. Bank is seeking potential acquisitions. Julie's been examining the men's retail landscape. And Julie, is there a deal in the works there?
No.
No.
That's the short answer.
Okay.
At least not.
Why not?
Anyone I'm talking to is saying that these two necessarily would come together. We did talk to a couple of investors who floated the possibility, but it doesn't look like that is the case. It looks like that the timing of these two things was actually entirely coincidental. I just talked to Gilbert Harrison. He is head of Financo, which is the company that Joseph A. Bank has hired. And he wouldn't comment directly to say who they might be talking to, etc., except to say that, yes, it is entirely coincidental that you had the firing of Zimmer last week and then Joseph A. Bank coming out and saying it is looking for acquisitions.
Who might they be looking to acquire then?
Well,
that's
really the question here. I mean, Women's Wear Daily came out earlier in May and said that Lucky Brands could be a target, which would be
really
a change in direction, obviously, yes, for Joseph A. Bank. Exactly. So
diversification.
Diversification, because actually, if you look at the Joseph A. Bank strategy, it doesn't seem to be working as well. The curious thing is that you have George Zimmer, right, who is an older guy. He's been on the commercials for years, and yet it's working for the company. They do a lot in tuxedo rentals, for example. This had been the season for that. But the company sales, if you look at their same-store sales, they're faring better than Joseph A. Bank.
What portfolio managers are asking about in the stock market is, do I buy low-end consumer stocks or high-end stocks? That seems to be the game they always want to play, and the key variable is consumer confidence. So we have to watch confidence. All the models that forecast revenue in the retail space forecast revenue improving later in the year because the drivers are economic things like housing, which are improving. So we think retail sales could get better. I just don't know if it's low or high-end. I have a bias, actually, more toward the high-end stuff.
Well, and there's even sort of a nuance in between these two, right? Because on the one hand, you have a Joseph A. Bank, which is about 50% suits, 50% sportswear, more casual wear, and theirs is mostly private label merchandise, which it's priced initially very high, and then they mark it down and down and down and down. And you can see the size differential between the two here. And then you have Men's Wearhouse, which actually sells name brand suits, but they mark them down. Bert Flickinger, who's a retail consultant, was on Bloomberg earlier today, and he said, you know, it's a strategy difference. They're more like the TJ Maxx, for example, of the suit world. And he said, for now, that strategy seems to be working better. If you look at the stocks, if you look at the sales, that is borne out.